Hello, everybody. It's Jonathan Harmon with the J. Harmon Home Team with my friend Brian Nail of Iberia Bank Mortgage. You guys are our go-to. We like you guys.
Thank you.
A lot.
I like you guys too.
Well, good. We get questions often about first-time buyer, second-time buyer, maybe first-time investor, whatever. But we get a lot of questions that are very simply, what do I need to do to prepare to get a mortgage? And my go-to answer is always call this phone number, right, and talk to you. And I think what we would like to do, though, is just have a real quick primer on what is it that you're going to be looking for. So before they call, what are some things that they can go ahead and gather up and get ready for you?
Absolutely. Well, I always would start out that conversation once they've made that phone call with an example of what I consider the three-legged stool of mortgage. And if you imagine a stool with three legs, they all have to kind of be in balance or the chair might tip over. So
Might not tip over.
If they're not in balance, the chair might tip over.
Yeah, gotcha. Okay.
Make sure I say it right. Thank you.
Yeah.
All right. So anyway, if those three legs are going to be your income, which is going to get down to your ability to repay, because we want to put you in a home that we know that you're going to be able to afford. We don't want to create another situation where we have a 2008 on our hands where we've done stated income loans,
Sure.
and you get into a house and then 6 months later not be able to afford the payment, and all of a sudden you're ready to turn the keys back into the bank.
We always say that is we want the house to be a blessing, not a curse.
Absolutely.
Mm-hmm.
Absolutely. And what's a great point there is a lot of lenders will tell somebody, oh, you're approved for $450,000 and never talk about the payment with the client. And that way the client goes out there and buys a $450,000 house and they get their loan estimate once they're under contract and they're like, oh my gosh, that's more than I want to spend each month. So make sure when you talk to your mortgage lender, you have that conversation about not just necessarily what the lender can approve you for, but what's the reality.
What fits your actual life budget.
Right. You got 3 kids in daycare. You may not be able to. That's not going to show up in the debt to income calculation, but it's definitely going to be part of your monthly household budget. Another leg of the stool that we look at is going to be your credit score. How have you been with your payments? Have you been responsible? Have you made payments on time? Do you have any collections? Do you have any history of bankruptcies or foreclosures? So making sure that you have a clean history is good. I've got a client right now who is trying to refinance their house. And we ran their credit score and the number was in the 670s. And that was like, oh man, you could definitely save some money if your score was just a little bit higher. In his situation, it was an easy fix. He just was on he was an authorized user on a couple of credit cards that his parents had that were close to their credit limits. So we go in there and have him remove himself as the authorized user on those cards. And then within 4 or 5 days, his credit score is back up to 709 and he's gonna get great terms on his refinance.
Much better, yeah.
So so you're looking at credit as well. Then the last one, you got your income, you got your credit, and then you got your down payment. What kind of skin in the game do you have? In 2008, let me back up a little bit further. In 2005 through 2007, lenders were just throwing out money and making any
Some of them were
loan
110%.
Yeah, absolutely.
More than the purchase price.
So the person who was buying the house was like, oh, well, don't worry because this thing is just going to keep going to the moon, right? Like more house prices are going up. So in 6 years, when this arm's about to come due and readjust, I'll just sell the house or I'll refinance it because I'll have equity in my house.
And they got caught.
They got busted. They got caught. So what happens now is you're going to have to show your funds for your down payment. You're going to have a little bit of skin in the game. Now, there are some programs out there where you can get down payment assistance, so you don't have to have 20% to put down. FHA is a 3.5% down payment. Conventional loan can be a 3% down payment. And there's THDA and RD and all kinds of other programs. But to qualify for those, you have to do a little bit more than you did back in.
Well, and from a marketing standpoint, marketing buyers to potential sellers in this market, the more skin in the game that you have, the easier it's going to be for us to find you the house of your dreams. I mean, it just is.
That's very true.
And one of the things I think is super important, and as you guys are watching this and you're thinking about this and you're getting the 3 legs ready for your stool, is start early, right? So even if you think you're going to buy in 6 months, start getting that stuff together now and start talking to your lender now. Because just like your friend that had the 670 credit score, sometimes we can work a little bit, we can delay for 3 months, and your terms are going to be way better just in following your guidance.
Right, and that's going to help you qualify for maybe the house that you want to have instead of the house that you can get.
Settle on. Yeah.
One other thing that I wanted to add in there too was, I shouldn't have gone down that road because that thought just went away.
It's all right, we can cut it.
Yeah. You said something.
You can cut this, right?
Yes.
Fix it in post. Isn't that what we all say?
What did you say?
About the roadmap, getting you going the right direction.
Started early. Okay, I got it. Okay.
Yeah.
So,
Pause. Now.
you had said something about starting early. You mentioned starting early in the process. I think that's a great tool, or something to consider, especially if you're self-employed. Right now is the time that you're kind of preparing your end of year financials.
Mm-hmm.
You're getting some reports ready to send over to your CPA. If you think you may be buying a house really in the next 2 years, you want to show some income, because that's one thing we run into a lot of times with anybody
Good
that's
point.
1099, whether you're driving for Lyft or whether you own a small business, or maybe you're a commission employee, and instead of paying you on a W-2, the company that you really work for pays you on a 1099, which gives you the ability to write off all your mileage
And it's very tempting to show no income.
It's very tempting to take the break
Yeah,
on taxes, but
yeah.
you can't have it both ways.
That's right.
Any lender is going to look at to get the best terms. There's going to be some lenders who will do some stated income or no doc loans, but if you really truly want to get the best terms, go ahead and show some income. Take it.
Pay your taxes.
Pay your taxes, and you'll get a better deal on your mortgage.
That is great advice. Hey, as always, if you have any questions, if you have any concerns, if every situation is unique, please give us a call, give Bryan a call, give both of us a call. We'd love to talk, and we'd love to help, love to get you going in the right direction. So thanks for watching.